So today we're going to do a bit of an update into Inmode and how it's all going for this company, especially after it reported earnings yesterday, and them earnings were absolutely fantastic and it was well received on the stock price as well, because the stock price has gone absolutely mental. In fact, this month has been a very good month for Inmode, so we're going to talk about that. I know a lot of you guys enjoyed the spreadsheet yesterday for gang, so I stuck Inmode on the same spreadsheet to see how it's all going from that point of view, and yeah, just do a little bit of an update into earnings and my current thoughts into Inmode. And I also think it's a really good subject to talk about, like a company like Inmode, because obviously it's a stock that I've been in for like 2 years right now, and what I think I get caught in quite a bit on this channel is I always like to talk about the stocks that are down. I always like to talk about the stocks that are down because those are normally the stocks where the opportunity is. Those are the stocks that you want to be capitalizing on because they're normally at sold off valuations, and I like to talk about them stocks on the channel, but I think sometimes I'm a bit guilty of focusing on them and I actually don't focus on the companies that are actually doing well. Like, you know, we've been talking about Inmode on the channel for a long time and the company's absolutely flying. You know, I think I'm up 80% on that position in a bear market as well, and I don't really talk about the stocks that I'm in that are up quite a bit, because what's the point? You know, we've kind of like, we're up on them, there's not, you know, they're not the opportunities to be buying, they're not as good valuations, and sometimes I think it's really good that I talk about them opportunities or them previous investments and talk about the success as well as the stocks that are dropping and those potentially being the opportunities. So yeah, highlighting a stock that's done absolutely amazing at the moment, so we're going to take a look at that. And just let you know, if you want to know what I'm buying and selling in real time, and also 2 exclusive videos a week, I've just dropped a live Q&A session and an education video on what to do when we go back into a bull market on the Patreon. To join, that link is in the description. It's £5 a month. It's absolutely amazing for the value, and I'm not trying to be biased there, but we'll get stuck into Inmode. So yesterday Inmode was on fire. It was up 13%, and in the last month, let's have a look, it's up 43% in the last month. So congratulations to you guys that were buying the dip on Inmode. Crazy to think it went all the way down to $21, and since then it's up 55%. And Inmode's one of those prime examples. I remember talking about this stock when it started touching these 52 close, and it was just one of those classic ones where people went, oh, it's a terrible company, why would you want to be buying Inmode? And it just summed where we were in the market and the negative sentiment that was out there. People were generally saying not to buy Inmode, and it was like one of the best bargains on the stock market. I was buying it a fair amount, and if you have been buying that, you've been collecting some rewards in these last few weeks. And by the way, I also still think it is still a pretty good valuation, and it still has some upside, which we'll talk about in a second. But you can see here, compared to like other companies, this is actually way off its like CV lows. You know, we've been talking about a lot of companies that are at CV lows. It's actually kind of towards its you know, February, March 2021 levels. So yeah, it's not as cheap as what I think it was, you know, a couple of months back, but I still don't think it's the worst valuation ever. And for me personally, I've been in this stock since around about June time. So you can see here, I would be up 138%, but I've been averaging up a little bit. So I'm currently up around about 70-80% on this one right now. So it's been absolutely a fantastic performer for me. Now, in case you don't know what Inmode does really quickly, they basically produce a lot of surgical products. Well, when I say surgical, they're avoiding the normal traditional methods of surgery where you go to sleep, you have to be cut open, and they make things that will make your appearance better. So potentially they could be, like for example, you might not be happy with your chin, you might think you've got a double chin and you want to kind of get rid of some fat on your chin. Normally you'd have to go to the knife, have that removed, whereas Inmode have a product that would heat the skin up, burn the fat away and remove that without being put to sleep or having the surgery. So obviously very, very popular, and also with a society where people are trying to look better and better all the time. Obviously that's a very big growing industry, so that's one of the devices they have. So they produce them devices that do them sort of things. So obviously I think this is a good space to be in right now in the next few years. Now, Inmode did bring out preliminary Q2 results. Their preliminary Q2 results were absolutely fantastic. You can see that basically is what set us up for this run here, as you can see here. Really good numbers, and then they also brought out their full earnings yesterday, and they were once again absolutely fantastic. You can see here that the EPS was a beat by 0.08, which is great, and the revenue was 113 million, and the beat by 10 million. That's correct, 10 million. That's a massive beat on the revenue. They're growing at 30% year over year. This is in a year where they're only expected to grow 20% year over year, so I am expecting the outlook to get hiked up a little bit, because they are once again way ahead of analyst expectations on profit growth and also on revenue growth. So we did see a little bit of a hike up here already. There was supposed to be, like 20% year over year on the revenue and flat on the EPS. In fact, that's actually probably still going to grow at good rates going forward. And you can see the outlook was raised. So the revenue was between 425 to 435, and the consensus was 422 million. So that's a really big hike up there. And you can see here the non-GAAP gross margins between 83 to 85%. And the non-GAAP EP earnings per diluted share was to be between 2.11 to 2.16, and the consensus was 2.09. So really good numbers there. Now, as well as that, Inmode at the moment have had a lot of criticism that they are just basically a one-off kind of platform. What was really impressive to see in this quarter is you can see here they had record quarterly revenues from consumables and services of 15 million, an increase of 59%. So one of the big criticisms they have is that they don't have many reselling products, many service parts of the business. And in this quarter, it was the strongest part of the business, and it started to make up a bigger chunk of the revenue as well, which was, I think, was one of the highlights into these earnings reports, and is one of the criticisms they've had. There you go, Inmode are starting to deal with that criticism there with having a good increase there of 59%. So that was another standout point in this earnings report from Inmode. As well as that, they're buying shares back really aggressively. You can see here they did announce a repurchase program to buy up 1 million ordinary shares. They have been announcing these small buybacks on a regular basis as well. So this will probably take us for another couple of months, and then they'll probably announce another couple, which is great to see a big share buyback happening at the moment. So with all that in mind, what does this look like for the company? So I thought you guys really enjoyed the spreadsheet yesterday. We'll do the same and stick Inmode on it and see how we're doing. You know what? You guys are loving the spreadsheet so much, I might have to be like Everything Money and charge £30 a month for a spreadsheet like this. Anyway, none of that. Give over. Right, here we go. So if we look here, we've got Inmode, INMD, price $33.35. As recording this morning, obviously the market's going to open. It looks pretty positive in the market. I don't know where Inmode's going to go, but this is where it is right now. 2.73 billion market cap, 83 million shares outstanding. So share buybacks, they are currently doing share buyback. Obviously they're buying back 1 million amounts of shares. I think over the next 5 years, we could at least expect a 3 million buyback of shares. I think that's very conservative as well, but I put 3 million in. And just to put that into context as well, I think so far this year, I think they've bought 2 million shares back. So when we're considering this is going to go through 2022 to 2026, yeah, you can see that share buyback is very conservative. So yeah, if we look here, we can see that if they were to fulfill that 3 million buyback, we're going to be looking at a 2.6 billion market cap company if they are going to not buy back shares and just take that assumption away. 2.73 billion market cap company like we mentioned earlier. Now for revenue growth, it's a little bit of a mixed future here. So obviously when this company matures more and more, they're not going to grow at the rates they have done previously. So if I just go on the previous growth rates here, you can see the revenue growth has been absolutely amazing. Nearly 60-70% growth there. Something like another 50% growth there. This year they did 20, 25, 30% growth, and then through 2020 to 2021 you can see that there was around about a 50% growth here. And like I said, this year you can see that at the moment analysts are forecasting around about 20% growth. This could actually turn out to be 30% growth, and then going forward analysts are expecting that growth to slow down a little bit, around about that 10 to 15% growth rates. But you can see even right now analysts are getting the growth rates very sandbagged at the moment. So it's very unsure what growth rates they are going to grow at. So I just went, even though historically this company's grown 30, 40, 50%, I'm going to assume the growth does slow down in the next 5 years. So I did put a conservative one in of 10%, 15% and 20% growth rates. But like we said, that could be quite conservative going forward. But I think 20% in the next few years is a fair amount to assume here. Profit margins, same again, this was a little bit of a tricky one because the profit margins have been improving. You can see here the profit margins 35, 38, and I've gone 44% on the high end assumption. Now the reason why is because these profit margins are very much in and out. You can see that the profit margins have just got better and better. By the way, if you want to sign up to Simple Wall Street, I've got a link in the description. Join through there, you get 30% off the subscription as well for the year. It's a great platform. You'll see me use it in the videos all the time. So you see here they went from 27%, they've gone to 39%, 41%, 46%, 42%. So the profit margins are a bit inconsistent. They're fantastic margins, but it's very hard to predict the margins here. So yeah, I just went for a bit of a big range here, 35, 38, 44, a little bit hard to predict them profit margins. And then I went for a 20 times multiple, that being the market average. The $1 million question is, will it trade at a higher multiple than 20? Now, when you look at this company here and you have this amount of growth, when you look and they're putting in 40% profit margins, when you look at the company and it is sitting on that much cash, let's just have a look at this balance sheet here. It's got no debt on the balance sheet. It's sitting on 443 million in cash, and it's a 2.8 billion market cap, and it's putting that amount of profit in. I think this deserves to trade at a premium. Also when you consider that it has that much cash, what's it going to do? Potential acquisitions, more share buybacks, potentially a dividend down the line, which by the way, I hope they don't do because of tax purposes, but they have a lot of options because they generate that amount of cash. So when I put a 20 times multiple in, I think that's very, very fair. I think that you could argue this is going to be a higher premium company because of the growth it has, the profit it has, the balance sheet it has. But I thought that was quite conservative here to go for a 20 times multiple. So on the low side, it comes out with 58% or 61% when you consider share buybacks, 104% to 110% on the mid-size, which is still plenty of upside here, and on the high end, 181% to 188% on the more aggressive upside if they hit the higher end of the numbers. So you can see here the company's still coming out with pretty decent upside at the moment. So when you do look at the share price, I do think it's 16 times earnings. You look at the growth of the business, I do think it's still not a bad valuation at all. I've got to say it's not as good as when it was down here in this kind of 20, 21, 22, 23, $24 range. I thought that was an unbelievable opportunity, but I still don't think it's terrible, and obviously I'm still going to hold my shares because I still think there's plenty of upside from where we're at right now. Obviously I'm already up over 70% on this position. I still think I'm going to walk away with 300-400% return on this one. So yeah, it's still a good one to watch. And the big thing as well is when you look here, one of the big things to like I said earlier, is multiple expansion. I think people don't realize that one great book to read on multiple expansion is The 100 Baggers. One of the great things that really does help you returns is multiple expansion. So you can see here I put 20 times earnings in, and like I said earlier, I don't think this deserves to trade at this. I think this deserves to be a premium because it's a premium company. So let's just take, for example, let's just say we take the mid assumptions in. Let's say it does trade at a 30 times multiple because that's a bit more of a premium, and you can see our upside here goes to 207 to 215%. So that's just what a bit of a premium or multiple expansion would do for this company. Same as on here, let's just say it trades at a bit more of a premium, 30 times earnings instead of 20. Your upside now is 321 to 332% upside here. So yeah, even without me assuming multiple expansion, which I think it will have, it's not a bad valuation at all. So that's a little bit of an update into Inmode. I hope you enjoyed it. Like I said, absolutely fantastic numbers. Congratulations to you guys that are holding shares at the moment. And even now, I'm still holding my shares because I think there's still plenty of upside in this next 5 years, especially if it delivers on the numbers. And I think that it also should be trading at a bit more of a premium than what it is when you look at the balance sheet, the profit that it does, the revenue growth it offers. So yeah, fantastic from Inmode. Hope you enjoyed the update anyway, guys, and I'll see you on the next video.